Deepan, request you to stay with us, wanting your view on the housing space as well, because the next management we have is Ashiana Housing. That's the first management on the show. The company reported a strong showing actually in quarter 3 on a year-on-year basis. So on a sequential basis, there's a bit of a decline. To discuss more about the past quarter, the trends going ahead, we're joined by Mr. Varun Gupta, the director at Ashiana Housing. Hi Varun, good morning and Happy New Year to you, your entire team, and wishing you all the best for 2025. Well, let's talk about the past quarter. Happy New Year. Let's talk about the past quarter then. You know, on a year-on-year basis, looks absolutely stellar. On a sequential basis, not that great. Could you tell us why is there a decline on a sequential basis? Point number one. Point number two is you had guided for pre-sales of around 2,000 crores. Stick to that?
Yes. So first, we stick to the guidance of the pre-sales of 2,000 crores. The last 3 quarters have gone as per plan. So now the fourth quarter will really define whether we'll hit our numbers in terms of guidance or not. We have 2 phase launches which are going to be critical, one in Gurgaon, one in Jaipur, to define whether we get to the 2,000 crores number or not. And at this moment in time, we maintain that guidance. We think we are on track to get there. And quarter variations, as I said, we have some quarterly variations because of what projects are available, where do we have stock to sell, what launches happen. So quarter-on-quarter numbers for us do vary given the size of the company. So last quarter was, I think, a great quarter in the sense that we did not have much stock to sell in Gurgaon in terms of the launch that happened in Q2. Therefore, the Q2 was great. In Q3, we had actually secular sales across locations and saw good numbers come from various cities. And that's been the heartening part about the last quarter that we saw.
Okay, all right. Just one more question, Varun, since you mentioned about the sales from new launches as well as from the inventory. If you could break it up for us in the past quarter, how much of the sales were from the old inventory that you had and from new launches? Is there a breakup?
I do not have that data exact breakup, but in terms of a new project launch, we had all of one in Ashiana Swarang, and we had 2 phase launches of Ashiana Amod Phase 2 and Phase 4. I don't know the number on top of my head, but I would say close to about 45% should be from there.
Okay, all right. A quick question then on pricing. You know, your average selling price per square foot, I think, moved up from 5,000-6,000 rupees, closer to 9,000 rupees. That's the last number that I have. What is the rough number that you're looking at? What kind of range? And a quick question on Gurgaon as well, in terms of demand. There is some fear that demand is plateauing out. Any signs for you, or you believe it's as rocking as it was?
So demand in Gurgaon is plateauing out. I think overall there has been a lot of supply in the luxury segment in the market, and Gurgaon has had speculative investments as well as a market as a whole. Fortunately for us, 2 things: we operate in the 2 to 3 crore segment there, and so we are in a sort of supplying units in a ticket size where there is still lack of supply, and we don't allow transfer of units without registering the units. So we've also had much lesser speculative play in when we sell our apartments, and both of those, I think, provide significant stability to our sales. And in terms of average sale price, I think we will be within that 6,000 to 8,000 rupees a square foot of average selling price, depending on what inventory we sell in what projects and locations, because I think right now we have price points varying from 4,000 to up to 15,000 rupees a square foot. So depending on the mix, the prices on a quarterly level vary. I think we should average about 7,500 rupees a square foot in general over the next few years.
Okay, 7,500. Varun, hi, good morning. You know, yesterday we had someone from Knight Frank, and there was a broader discussion, not a company-specific discussion on real estate. And he said he was kind of referencing the last, big fall that we had, and it started in the NCR region 12 years ago. And he was saying, well, I shudder to think what will happen if that were to repeat. It was just an observation. Where you say demand is plateauing out in Gurgaon, it's largely a function of what? I mean, too much supply and demand not keeping up? Or, I mean, you're actually seeing, that's evenly matched, but demand not keeping up. What's your sense?
So my sense
And in what
is
price
that-
category? In what price category?
Yeah, so my sense is that Gurgaon is not oversupplied in total number of units as compared to the number of units that the city can absorb. I think what the challenge there is that all of us as developers have gone and launched more and more luxury projects because they're more profitable. And I think more in the north of the 4 crore, 5 crore bracket, I think there is too many units as compared to the demand in the affordability index that is there. So that is there. The fall that was there 11, 12 years ago, I don't know when it will come. The business is cyclical. So we are going to get some falls and then some upswings and then some falls and then upswings in this business. I don't think we should fear that so much. That's just part of how real estate operates worldwide, and cycles will come and go. Our job as a management is to be able to work through those cycles and build a business which will run through the cycles.
Generally, I mean, I think hopefully the companies are also much better capitalized, etc., as compared to back then, right? So that is
Yes.
also the case.
The
We'll
balance
leave it
sheets
there.
are in much better shape overall.
Absolutely. Varun, thank you very much for that. Appreciate it.
Thank you.
You're on CNBC TV 18. Good luck.